What's your spidey sense about the markets and the economy? Because mine's a little worried these days. But you would know much better than I.
Well, I would say this. When you have a January effect after a very difficult prior year, I think it really is sound and fury and signifies nothing. So I see the markets gone up in January. I don't think it means much for how we're going to play out for the balance of the year.
Wow, that's... Yeah,
Go ahead.
Don't crush people's dreams too much here. I mean,
no, I don't.
What about the people who say, well, but we've priced in the downturn and the labor market's still strong and, a soft landing is still possible and it's going to be off to the races?
Well, see, I think we're in a period of time where the smoke is still up. And you this morning talked about basically the employee cost index, and we're up 1%. And the expectation was 1.1%. So if you're in the soft landing camp, you have the right to say, hey, this is a better number, and I think we're on the right path. If you're on the hard landing camp, you can say, well, it's still 1%, which is historically a very high number. So I think the smoke's in the air. 3 months from now, you'll have a better sense of where really the market's going to be. We're kind of in a 60-40 time when you take surveys. Even more shocking to me is when you have 44% of the intelligent people following the Fed saying there's a chance the Fed's going to reduce rates this year, right? And then you have another 44% saying that's crazy. No way, no how. So smoke's in the air. 3 months from now, it's going to be easier to be a forecaster. Today, I think it's quite difficult.
Let me ask you about just sort of the fundamental biggest change here. I don't want to miss the forest for the trees. With interest rates where they are, how much of a headwind is that for corporate America?
So I think the sand is in the gears, and we don't know how significant that will be. And I don't want to play my hand in terms of what I think might happen. But I think with respect to the interest rate rises here, there is a delayed effect. Everybody knows that. You throw sand in the gears. Is that going to have the gears stop or just slow down? So we don't really know. So I think, again, in 6 months from now, we'll see what is the true impact of all the Fed rises we had in 2022. My bias is that we're going to go into, not quite a soft landing, a little harder than that.
You are a brave man, if I may mention, to be launching a hedge fund in this environment. Or maybe you think that, that's kind of, you want to kind of get in when people are going, wait a minute, I need someone I can trust to kind of navigate through a period like this.
Well, when people ask me about the markets, I always say don't bet against technology, right? It's just a hard thing to do, and you would have been wrong over the last 30 years. And technology will particularly advance. Now, I have particular expertise in financial technology, and that's what we're going to focus on with the hedge fund. But with respect to technology, one of the highlights of the year for me was fourth quarter 22 when I started playing with ChatGPT. It was... The future has arrived, right? When you first used that product, Kelly, you knew the world was going to be different. So technology is going to be doing many things. ChatGPT is one of a category called generative AI. There's other companies that are serious competitors that will do interesting things there. So when I think of the markets, I always think, okay, how do I not make sure I'm betting against technology?
So, and I guess what's so fascinating about this is most people would agree with you and yet look at the market and say, well, this has been the part that's been most hard hit by rate hikes. How much of the technological innovation capacity, certainly the share price increases that we saw over the past 10 years was just the flip side of low rates?
I can guarantee you one thing, Kelly. The people in the development labs at ChatGPT did not pay attention to what Jerome Powell did last year, right? They do what they do, right? So I get discounted cash flows when you trying to come up with a equity analysis. But in terms of innovation is, doesn't pay any attention to what's happening in the rates. If anything, these developers, you want to make sure you get them out to eat on time, not pay attention to what the Fed is doing.
Nah, fair enough. I'd be remiss while you're here not to ask you, what happened with the NYSE last week with that trading glitch where, people are saying they are demanding refunds. There's investigations going on. They're saying it was a manual error. Any insight?
Well, I don't have any special insight, but I read what you have read. And, I'm hearing it's a backup system in Chicago. And it's somewhat ironic that the backup system knocks down the primary system. But, that's somewhat the life in technology. NYSE, NASDAQ, others do a great job with technology, but it's obviously not perfect. We saw that clearly with the airlines. So they did have a backup system issue. They resolved it. And then in terms of how did they adjudicate the claims with the customers, I have no insight, not involved with that.